Are you thinking about buying or selling a home or are a real estate professional and want to keep up with the Twin Cities market news, stats, and trends? Then come hang out with us for a little while. Hi, I'm Kirk Duckwall, and welcome to the Twin Cities Real Estate Show. For those listening on AM 950, glad to have you here. And for those watching online, please like and subscribe to this video, as well as see all that we include at TwinCitiesRealEstateShow.com, where we have our free classes, our free publications, and for real estate professionals, now we even post our free CE classes that they can get more information on and join us there. So today, we're going to do a deep dive on loan programs that are out there, but this isn't your normal just blanket FHA, blanket conventional loan. I want to get into some of those other programs that a lot of people, when we tell them this, are really surprised. I actually got a call from a person who attended one of our home buying classes the other day, and they reached out and were talking about possibly renting and seeing if I could help for another year before they looked at buying a home. And so we got into the whole cost of saving conversation. Right. And I said, hey, do you know there's $1,000 down programs or 1% down programs out there? And she's like, no, I had no idea. Maybe we want to consider buying versus continuing to rent, because we know where that cost of saving issue comes in.
Very nice.
So yes, on that note, talking about loans, would like to welcome our guests or hosts. Amanda Winterer, thanks for coming in.
Pleasure to be here.
Yes. And Chad Priebe, thank you. You're gonna be the man of the show today.
Awesome.
Deep dive.
I look forward to it. It's good seeing you guys. Happy New Year.
Happy New Year.
Happy New Year.
Yeah. Yes. So before, though, we get too deep into the loan conversation, I want to talk a bit about the Twin Cities market and kind of what we have been experiencing over the holiday time frame and post-holiday time frame. There's some really interesting stats. So can't remember if I brought it up on the last show, but we actually saw a jump in the market meter over Christmas week and into New Year's. That we saw us go from a buyer's market, a mild buyer's market, back into a stable market range, which I thought was, wow, over that period of time, usually things are a little bit slower. Right. And we saw a nice increase in activity there. So, for those wondering when the bottom was going to hit, well, it hit. It hit, right? It hit a few weeks back.
Right.
So the market is definitely looking like we're going to have a strong spring market. I know last week we really kind of got into our thoughts on where the market would be going, so I don't want to talk too much about that. But we're seeing some good movement now. On another point, the showings per listing per week, when I pulled it up, normally the first week after the new year, we see the showings per listing per week double. Okay. And I looked at it, and it went from a 2.95. Now, this is in the 250 to 500K range, Twin Cities area. Okay. It went from a 2.95 only up to a 3.39. I'm like, whoa. That's a really small jump. Normally this doubles. It should have gone up to like a 5 or a 6 the week after New Year's. Then I got into, have you ever seen the movie Pee Wee Herman's Big Adventure?
Oh, yeah. Of course.
Yes. Well, there's this scene, and they talk about the big butt. What's your big butt? Right?
Yeah.
Well, so the big butt. But what happened New Year's week?
Snowstorm.
Right. So Sunday was New Year's. Monday was observed New Year's. Right. Tuesday, snow. Wednesday, snow. Thursday, kind of still snowing, cleaning up Thursday, right?
Right. Yeah.
So now I look at the 2.95 up to a 3.39. I'm like, wow, that's actually pretty impressive.
Not bad. People still got out and battled the blizzard.
Yeah, and our showings, total number of showings in areas used went from, I think it was about 12 up to 1595, 1,200 and something up to 1595. I'm like, wow.
That's good.
Yeah, that's real good for really only 2 days of good activity.
Yeah.
Right. So, I think I'll be really curious to see what happens for this week, as in the week we're recording the show, when we pull the numbers. Yeah. Because I think we're going to have a pretty strong spring market based on some of that.
So the numbers you're saying, or we have been saying for months now, are really coming true, right? If you wait too long, you're going to move into a competitive market,
Yes.
which we are already seeing.
Yeah. I mean, it goes back
offers.
to if you wait until it's, as a seller, if you wait until it's green, you're going to miss out on some green. So you really
Right.
want to make sure that if you are thinking about selling that you're looking at that February, March timeline to be coming to market, not
Right.
waiting so long. Don't wait until your gardens are in full bloom. You've missed the peak of the market by that point.
Right.
So, and we're talking, I mean, actually had a client we were looking at possibly listing here in January due to circumstances that it's going to probably be more like mid-February. And I'm like, actually, that's a big positive.
Yeah.
Right. That could be $5,000 to $10,000 extra dollars in your pocket just because you're going to hit the market at a hotter time.
Huge.
So, I mean, for buyers out there, not that it's bad by any means, stable market, a heck of a lot better than what we experienced this last spring, right, for buyers.
Yeah.
So what that means is home sale prices between 98 and 100% of asking on average,
Right.
when we talk about that. Okay, so looking at the breakdown of some of these stats, we have new listings. Now, this is going into from out of Christmas week into the week between their 324 up ever so slightly for new listings up to 331. Keep in mind, like at peak listing time in like gonna get to this month eventually here,
Right.
May. That's
Yeah.
the month I'm looking for.
Okay.
Yes, we're about 2,000 listings per week that come on, and now
Wow.
we're saying 331. So, for those waiting for inventory, it's gonna start coming.
Yeah.
Then pending sales, that dropped off a little bit, 460 down to 409. And that inventory of homes, that spread is increasing. So the total inventory it's dropping off, but in comparison to last year, that percentage difference is getting bigger. So we were at 6,943, now down to 6,582. So that's actually a pretty big drop in inventory.
Significant.
Yeah.
But a lot of that is this time of year, we see a ton of homes expiring. People put their listing contracts at the end of the year. So we
Okay.
see a lot of houses come out of the market during that time. So that differential now is we now have 20% more homes on the market for this time of year than in comparison to last year.
Okay.
To put this in some perspective, is the last time we had inventory around here was about 2018. And we are at 1.4 months supply with that. So basically what that means is that if all homes came off the market today, or not all,
If no more homes came to the market.
Thank you. I need more coffee. Yes.
Yes.
Or Coke, like I have here. Yes.
There you go.
So no more homes came to market. How long would it take for all of them to sell? It would take 1.4 months. And so the last time we saw that kind of number in the January timeline was in 2018. So we are seeing it coming back to more normal levels in comparison to, let's say, 2021, 2022 timelines this time of year. Days on market is actually, I think it's holding exactly stable in comparison to where it was. I think it's right around 40 days average. All right, we're going to take a quick commercial break. Check us out online, TwinCitiesRealEstateShow.com. There you can find all of our free publications. We'll be right back. Kirk Duckwall here again with the Twin Cities Real Estate Show. Our local sponsors are BRIX Real Estate, Network Title, Eric Bloomstrand and Chad Priebe with Bell Bank Mortgage, and James Tufson with the Preserve Group.
When shopping for a mortgage, there is a formula to get the best rate. With the market today, knowing this formula is more important than ever. My name is Chad Priebe with Bell Bank Mortgage. I have over 20 years experience in the mortgage industry and in home buying education. I'd like to share this useful tool with you to help you shop for your mortgage. You can find me at chadpriebe.com or call me at 651-207-9274.
Hello,
My name's James Topson with the Preserve Group. Anyone can sell you insurance. However, is it going to be the insurance you need? When life surprises pop up, you want the right coverage. When it comes time to find or renew your policy, give me a call. I would love to review your existing policy and show you what I can do for you. You can email me at james@mypreservegroup.com or give me a call at 651-728-4334.
Hi, I'm Kirk Duckwall with BRIX Real Estate and the Twin Cities Real Estate Show. Buying or selling a home is one of the biggest financial transactions people make. Before you make your next move, download our free Smart Home Buyer or Smart Seller guides to give you the edge in our real estate market. From deal hunting to knowing the right repairs for maximizing value, these free guides have it all. Check them out and more at BRIXTwinCities.com under publications. Welcome back to the Twin Cities Real Estate Show. Again, I can't stress enough that go to TwinCitiesRealEstateShow.com, download our free publications, the Smart Home Buyer Guide. Chad, you can hold up the Smart Seller Guide there. For those watching, obviously, if you're listening, you can't see us hold up those guides. Right. But you can go to TwinCitiesRealEstateShow.com and download those there. Some of the stuff we're going to dive into here, as far as loan options, are covered in that Smart Home Buyer Guide, but not everything. So make sure you pay attention here. We got some good stuff we're going to talk about as far as programs that maybe people don't really know about out there. Right. So I don't want to really get into the blanket FHA or conventional and all of that jazz, more into the nuances of some of these programs that are available.
Perfect.
You know, and I think what's so important for people to understand out there is putting together, before you start shopping around for a mortgage, is putting together what we call the formula.
Yes.
You want to break that down, Chad?
I do, yeah. Thanks for bringing that up, Kirk. More importantly, if you're out shopping for a mortgage like you mentioned and you want to get the best interest rate, congratulations, I do too, and I recommend you do that. As a smart consumer, you're going to want to do that. Before you do that, Kirk mentioned the formula. So we want to know what your credit score is.
We want a down payment.
Yep, down payment. Mm-hmm. We also want to know
property
type. We want to know who's going to pay your closing costs. Is it going to be you, or are we going to ask the seller to contribute towards your closing costs? And then monthly,
is it going to be baked into the rate?
Is it going to be baked into the rate, or who's going to pay your monthly mortgage insurance? Is it going to be monthly, single premium, or is it going to be lender paid? So that's the formula. Once we figure that out, we can then ask, what is the interest rate?
Right.
Without that information, if a lender's providing you an interest rate without that information, it's really worthless to you.
Yeah, I mean,
that interest rate doesn't hold any value at all because they don't know the formula.
Right. And so what happens is, I mean, you can see it all over, billboards with interest rates on them. Of course, not so much these days with them being a little higher.
Right.
But, as rates move down, we see that show up or clickbait ads online.
Right.
That they just show these rates, but there's all these little asterisks, there that this is if you're buying a $500,000 home with a credit score of this right. They even put the nuances there. You just got to look for it.
Got to find them.
Right. So they have the formula on these ads, but they want people to look at that big, bold interest rate. Right.
Right.
So you need to figure that piece of the pie out, because you can go around from spot to spot to spot just asking rate. Without that piece figured out, like you say, it means nothing.
It really does. Right? Yeah, and another thing too, guys, is when, and I'm conscious of this myself, is I don't want my credit report pulled out, multiple times, right? Reality is, when you're buying a home and you're looking for a mortgage, the only way the loan officer is going to be able to give you a 100% accurate answer to what your interest rate is, what your monthly payment is, what type of loan programs you are, what's available to you, is they have to pull your credit.
Yep.
Without pulling your credit, it's kind of like shopping for an interest rate without knowing the formula.
Right, and so I know the comment or objection, well, if I find the lower rate at this place, then wouldn't that place just have the lower rate? And the answer is no, because each place may have different premiums they apply for credit score, down payment, all of that. Correct? Am I correct?
Yeah, credit adjusters.
Right.
Yeah.
Yep. So, you may find a really good rate on one particular product, and that's what they're advertising, but that doesn't mean that you go to this other bank and once you actually fill out the app and pick your loan, that place might actually have a better rate.
Exactly. And they might have the opportunity by pulling your credit to maybe point out a couple minor things that you can look at repairing, or maybe not even repairing, but paying down a balance on a credit card can quickly increase your credit score, gives you a better interest rate, better programs, more affordability on your monthly payment.
And that's the reason I tell my clients and anyone looking to buy in the near future is start talking to a loan officer early so that you get that information.
Yeah,
people ask all the time, should I pay this down? Ask the loan officer because you're the one who's going to be able to tell them how it'll affect their credit score.
Yeah, good
work. We call it in the home buyer guide, you're not ready until you're ready, and you're not ready until you're pre-approved. People will go, oh, I'll apply when I'm ready. Well, you're looking at houses. You're ready. Trust me.
Right.
Okay. Let's hop into some of these products. Chad, Home Possible, Home Ready, Borrower Smart, all conventional.
Conventional, yes. Yeah, these are two programs that are very attractive, especially to first-time home buyers with a limited down payment. So Home Possible is Freddie Mac. Home Ready is Fannie Mae. They both offer a lower down payment of 3%. Conventional mortgage.
Okay.
FHA used to be looked at as the first-time home buyer program because they offered a 3.5% down to a 620 credit score, let's say. These programs will cater to a 620 credit score with a 3% down payment.
Wow. So then there's the Borrower Smart, which you said is a grant that is applied then to these products?
Yep. So the Borrower Smart Grant is a program that we offer. It's a limited program. Not all lenders have access to this program. I think there's 3 in the state of Minnesota. But this is all driven on your income. So if your income is 80% of the median income or lower, you're eligible for a $1,250 grant. Okay. If your income is considered low income, so below 50% of the median, right? 50%, you're getting a $2,500 grant.
Okay.
It's considered very low income, actually.
So is that a grant that has to be paid back then, or is it?
Nope, it's free money.
Okay.
What we're doing with that grant is we're then taking that and we're looking at a rate buy down, an interest rate buy down. So it's not increasing your cash amount out of pocket because we're taking that grant and we're buying your rate down with it.
Awesome.
It's a win-win situation.
Do you have to stay in the house for a certain amount of time?
No requirements on that at all.
Nice.
Yep. So there's no additional lien on the title. It's a true grant.
Wow.
Yeah, pretty sweet.
Is it limited at all by areas?
It is. Good question.
Yeah.
Geographically, so where this can become sticky is if you're looking for hypothetical quotes, and let's say you're looking to purchase in a rural area, maybe southern Minnesota.
Right.
Their income limits are different in a smaller rural town if they are in an urban area, right?
Okay.
So we want to make sure, and when I say we, us loan officers want to make sure we're asking those questions. Where are you purchasing? Because we want to go to the tool that Freddie and Fannie provides to punch in that city or state to find out what are the income limits.
Right.
Without doing that, you're going to be setting your client up for failure.
Now, just out of curiosity, this is a loan product I was going to bring up at the end, but I might just jump to it. Rural development. So you bring up moving out.
Yeah.
So rural development, the zero down.
Absolutely.
Would that maybe make more sense then in that scenario?
Yeah, absolutely. Those are all things that we're weighing out.
Okay.
Yep. And especially in today's age, right? We have a different interest rate environment. We just went through COVID. We have inventory shortages. There's a lot of different programs out there, you guys, that we are weighing out. We want to weigh out with you because we don't make the decision for you. We put the tools in your hands. You tell us what works best for you. That's the loan officer you should be working with. It's not a one-way street when it comes to mortgages anymore. There's a lot of options for the consumers.
Yeah, and I want to just kind of touch on that rural development real quickly. So basically, when you just start to just get a little bit outside the Twin Cities, that's where you can pull this, pull it up online and type in rural development and see where the maps and the boundaries are. But I think is Forest Lake in it, or do you need to more like North Branch?
A little further north.
Okay.
North Branch is where it starts, right around in that area. Now, if you're going south, I think Faribault, Elko, Faribault, Newmarket could be in that bucket. So,
all right. Rehab loans. This is one I wanted to touch on because we, used to look at the 203 203K and 203B.
Right.
And you were mentioning there's newer products out there for rehab. Yeah.
Good topic to talk about. With limited inventory, folks are thinking, let's stay in the house and do some fix. Let's fix it up. Let's update the home. We do offer a conventional rehab program, okay? And it's based on the future value. So the key here is you want to go out and hire yourself a really good, reputable contractor that can put together a very detailed estimate. Because
but you can do this on a purchase too.
Yeah,
right?
purchase
Yes.
or refinance.
Okay.
Correct.
Yeah.
We're going to then take that estimate, drawings, we want to get specs and plans. We're going to then deliver that to the appraiser that's going to determine the future value with those updates.
Okay.
And then we can lend you up to 95% of that future value.
Nice.
We can close on these loans within 30 to 45 days.
And does the contractor need to be associated with having done these loans before? Or
I
the type
recommend
of-
that.
Okay.
That's a really good question. So we do have an approved panel. It's not hard for a contractor to get approved, but we do want to know who you're working with. We want to protect you as a consumer. We hear these horror stories. There's contractors out there, unfortunately, that don't do the best job.
And you can't do the work yourself in these programs.
Very important. Thank you. You cannot do the work at all yourself.
Okay.
Yep. That is a very, very big program
So
right
are
now,
we-
you guys.
Are we not seeing really much of the 203K anymore in place, or are you? Not really?
We're not. The company I work for, Bell, we did those. We decided to part ways with that. The conventional program is so much more easier to work with, and it caters down to those lower credit scores.
Yep. All right. Let's talk about Recast. Well, you know what? 30 seconds here before commercial break.
That's okay.
Again, if you want all of our guides, some more deep dive into this, TwinCitiesRealEstateShow.com. We have our publications there. When we come back, we're going to touch on recast loans real quick, as well as maybe the Bell moving forward. We're going to take a quick commercial break. We'll be right back.
Not every title company is the same. There are many people involved with each real estate transaction, and all of them need to be in the loop or a closing may get delayed. This is why the people at Network Title strive to provide swift scheduling and communication between the buyers, sellers, agents, and lenders. We know moving can be stressful, however, your closing does not need to be. Check us out online at network-title.com.
Hello, my name's James Topson with the Preserve Group. Anyone can sell you insurance. However, is it going to be the insurance you need? When life surprises pop up, you want the right coverage. When it comes time to find or renew your policy, give me a call. I would love to review your existing policy and show you what I can do for you. You can email me at james@mypreservegroup.com or give me a call at 651-728-4334.
When shopping for a mortgage, there is a formula to get the best rate. With the market today, knowing this formula is more important than ever. My name is Chad Priebe with Bell Bank Mortgage. I have over 20 years experience in the mortgage industry and in home buying education. I'd like to share this useful tool with you to help you shop for your mortgage. You can find me at chadpriebe.com or call me at 651-207-9274.
Welcome back to the Twin Cities Real Estate Show. Only a couple minutes here, so I want to make sure that I thank you guys again for coming in. Amanda
Thank you,
Winterer,
Kirk.
Chad Priebe, because I know once we get talking about this, it's going to come to a hard stop at the
Right,
end of the show.
right.
Okay, so we've got a couple more loan products I want to talk about here. What can you tell us about the Bell Moving Forward program?
Yeah, thank you. It's an exclusive product that we offer. It's a conventional loan, 1% down to a 620 credit score. Here's the big one: no monthly mortgage insurance.
Wow. I mean,
Okay.
that's probably a few $100 or $150 at least a month differential, which
huge.
I mean, that equates to a good $25,000 plus in buying power if somebody wanted to utilize it that way.
And we've done the math on
Yeah.
that. That is right. With these, the interest rates are a little bit higher, but it allows you to get into a home with 1% down Again, it caters down to that 620 credit score, and we can go up to 50% debt to income on these loans. So
Yeah.
there's some flexibility with these. There are some overlays on this program, like you can't have more than 3 jobs in 1 year. You can't have any active collections. And if you're a renter, we need to get a 12-month rental history. If you're living rent-free, it's as easy as a rent-free letter is what we call it. But
Gotcha.
it's pretty much a conventional Fannie Mae loan.
Nice. Well, yeah, and I think the thing to, home prices right now in comparison to last year, it's a significantly better environment for buyers to be getting into. And so if there's a mild rate increase, but you're finding the house that you want, and of course go back to that cost of saving, right?
Right.
That $14,000 a year a buyer needs to save, quote unquote, save to keep up with the market.
It's very hard to do.
Oh my goodness.
Yeah.
So you might as well, I always say, when's the right time to buy a home? When you find the right home, but you're not going to find the right home unless you're looking, right?
Right.
So, okay, real quick, recast loan. You got 1 minute. What is a recast loan?
Recast, I want you to look at it as a principal reduction of your mortgage. So after, let's say you own a current home,
Yep.
and you want to make an offer non-contingent on that sale.
Yep.
You can then put 5% down on the new loan.
Yep.
With the idea that when you sell your current home, you take the proceeds, you then do a recast on the new loan, which is a principal reduction. Not only does it bring down your mortgage balance, but it drops the monthly payment. And if you hit that 20% equity, it then drops the mortgage insurance.
Nice.
And the interest rate stays the same.
Nothing changes with the rate.
Nothing.
No more closing costs.
No
Well,
more closing costs.
Wow.
Just a few
huge.
seconds left here. I want to promote the Smart Home Buyer Guide, TwinCitiesRealEstateShow.com. You can download that. We cover all of the different options you can kind of look at when you're thinking about that buy-sell situation.
Yeah.
So highly recommend reading that. Again, thanks for coming in. Like and subscribe if you're watching online. People always ask realtors, what is your commission? But what they should be asking is, what is your rate of return? Commissions only vary by a couple of percent from agent to agent. However, the price per square foot you get just based on their experience and the quality of marketing they use can vary by 10% or more. At BRIX Real Estate, our agents use the right marketing and have the experience to get you top dollar for your house. See what we can do for you at BRIXTwinCities.com.
Not every title company is the same. There are many people involved with each real estate transaction, and all of them need to be in the loop or a closing may get delayed. This is why the people at Network Title strive to provide swift scheduling and communication between the buyers, sellers, agents, and lenders. We know moving can be stressful, however, your closing does not need to be. Check us out online at network-title.com.
Don't forget to check us out online anytime at TwinCitiesRealEstateShow.com. There you can find all of our past shows, our weekly market updates, along with the latest and greatest searching and researching tools, and our free publications to include the Smart Home Buyer Guide and the Smart Seller Guide, along with the BRIX Report. All of these free for you. If you have any real estate questions, please feel free to give us a call, 651-303-0019. Again, 651-303-0019. Happy to help answer any of your real estate questions or assist with your real estate needs.